Good morning, everybody. Happy Tuesday. Today is Tuesday, April 4th. Markets are off to a slow but positive start. Dollar is down slightly. It was up more this morning, but it looks like it could be pulling back right now from 102.20 at the top down to 102.05. SPY is currently trading for 411.63, up from 410.95 at close yesterday. So about 60 cents. And then looking at the other indices, the Qs is up about 35 cents. The Dow is up 5 cents. And then IWM, the Russell 2000, is up about 50 cents. So again, very slow green start to the day. My assumption for today, we're going to get the JOLTS job openings coming out at 10 in the morning, so in about 30 minutes or so. And I believe that that is going to trigger the dollar to finally catch a bid or go up. The dollar has been falling for the past month. Part of the reason why we've seen this substantial rally for the markets, the dollar index went from 105.83 at the beginning, towards the beginning of the month, to currently 102. So it's just been on a steady decline, whereas your QQQ has been on a steady incline. These usually have an inverse correlation with one another. So that's what I'll be watching today, the dollar index, and see how it reacts to the JOLTS job openings, which is coming out at 10 a.m. Markets are now open. SPY is up 0.15%. QQQ is up 0.17, so it looks like all the indices are less than up 0.5%. Oil is making some more gains this morning, up 1.2% for Brent crude at $81 a barrel. So this is after the OPEC decided to cut production by over 1 million barrels per day. So this is going to put some inflation pressure and probably make the Fed's job a little bit harder. So that's why we're seeing interest rates slightly on the rise this morning, but not really making too much change compared to the last few days of trading for the 10-year yield. But yeah, let's check. SPY's at 411.50. Coming down some more. We're starting to look bearish for the 5-minute RSI at 31. So getting into oversold territory. But of course, that 10 a.m. JOLTS job openings report could always change the sentiment. It's going to be very volatile either way. And volatility works in both directions. So always be aware of that. Good morning, Donald. Good morning, Martin. Good morning, Kamala. Good morning, Irfan. Happy Tuesday to everybody. Let's check in on the put debit spread that I had opened right before the close yesterday. Currently down by 96. I opened these at 47. I think I overpaid. Now they're going for 35. So I kind of wish I had waited a little bit longer to purchase them. Maybe doing it this morning instead. But I do think that there's a decent chance we'll definitely break even today. Which would be about 411. 410 would be about a 0.25% drop. And considering that pretty much every single day has been green for like the last, God knows how long. Let's see. 1, 2, 3, 4, 5 days, it looks like. I think that we could see a decent pullback, but again, I think that it's really going to depend on how the JOLTS job openings comes out. Volatility works in both directions, and that's coming out in 28 minutes. The VIX is up slightly, 2.3% to $19. So it's just catching that bottom at around 1850 again and managing its way up from there. There's not really much big change out of the VIX as of yet, but it did end the day just about at the lows at 1850. So seeing a pop for the VIX could end up being the case this morning. Good morning, Steve. These are going for 38 cents a piece now. Again, I bought them for 47, so I'm still down by about 20% at the moment. But let's check in on the dollar index is down 0.05%, so this one's pulling back some more. 102.03 down from 102.20 at the peak. So if this continues to head on down, probably wouldn't want to be in any bearish positions to hold, but we'll see with that 10 a.m. report how that shakes things up. QQQ is only up 0.1%. Let's check the big names. Apple is basically flat at the moment. Microsoft is down 0.25%. What else is there? Tesla is actually up 2%. So maybe we could take another bullish trade on Tesla. Assume that it could hit 200. That could be our hedge against our bearish position we have for SPY. And let's see, NVIDIA is down 0.65%. So NVIDIA seems to be leading the way down for the large mega cap companies. But Tesla is balancing that out with 2% to the upside almost. Let me see how much I'll pay. I guess the expiration date would be all the way on Friday, so that's a long wait till expiration. And of course, it could always pull back below 200 again after it goes above it. But let me see. Tesla expiring this Friday. Call debit spread, assuming it's going to be above 200, is going for $1.20 at the moment. So you can make about 130 for every 120 you spend. So about a 1-to-1 risk-reward ratio. All right, TLT bonds are moving down, with TLT coming down at least 0.75%. The 10-year is up to 3.475, so almost at 3.5 again. Not quite there. And the dollar index seems to continue to be pulling back right now. So I think I'm going to take that bullish position for Tesla just to hedge my bets for SPY in case the dollar index keeps on coming down. Don't have any earnings for y'all this week, unfortunately, but I'll try to trade some individual stocks, and Tesla seems like a decent trade with that $200 level going above and below it a bunch of times. All right, not getting filled at 120 there. All right. Oh, actually did get filled. There we go. Took a minute. New options alert. This will be probably a swing trade. Just opened a new Tesla call debit spread. It's expiring this Friday. This Friday is the 6th. Thursday. It's an early week. Short week, I should say. And I'm assuming it's going to be about 200, 197 and a half, 200 strike prices. And make sure I spell that right, huh? There we go. All right, these SPY trades are gaining a little bit more value in that Tesla is losing its value. So, again, these are going to be kind of a hedge against one another. How much UVXY am I holding and how long to wait for it? Still holding 450 shares. Let's see. UVXY. Bought it way higher than what it's trading for now. It's 693. And I bought 481 shares worth of it. So I'm going to keep holding probably for the next couple of weeks. And then any pop that we see for the VIX, I'll probably use as an opportunity to sell some cover calls on since I have 500 shares of it. So if we see like a 5-6% move for UVXY and VIX, I'll take that as an opportunity to collect some premium on it and reduce the cost. But looks like SPY is finally managing its way down to 411 again, so we're about break even. QQQ is slightly in the red. IWM is down 0.5%, so IWM, the Russell 2000 small caps, is leading the way down. And the Dow is down 0.7%. All right. Let's see if we have any news coming out. We've got about 20 minutes until the JOLTS job openings report. Now SPY's below 411 at 410.70 right now. So those put debit spreads should be making us some profit right now. Yeah, currently, well, they're still down by 24. I'm going for 44 a piece, and I bought them at 47. Hello, Jones. Welcome. More job openings means the market is weakening. If there's more job openings, that means that the Fed has to tighten the labor market more with higher interest rates. Right now, the problem is that there's a lot of jobs in the services industry that are continuing to be added, and the services industry takes longer in order to cool off the inflation in that sector. Whereas goods, we've already seen goods starting to pull back for some food prices, and other goods coming down in price. But we're still seeing sticky services inflation, with services inflation up like 7% year over year as of the last reading, whereas goods inflation was only like 2.5%, right? So as long as services inflation is sticky, the Fed has to keep raising rates. So if there is more jobs that are being added to the economy, especially in the services industry, then the Fed has to raise rates more, which would be even more bearish for the market because we're already in a pretty sticky spot where interest rates are so high that it's bringing down the asset value that banks have because they bought into a bunch of bonds whenever interest rates were super low a couple of years ago, and now they're holding those and they're losing money on them. So if interest rates keep going up, the bank losses are going to get larger and larger, and at some point the banks are going to either capitulate like we saw for Silicon Valley Bank, or they're going to tighten up their lending standards. So they're not going to be as willing to lend out money for car loans, home loans, business loans as they have been so frivolously over the last couple of years, which means that there's going to be slower growth in the economy. You're going to have a contraction for GDP, a recession. Do I think the JOLTS job openings will cause a surge, slump, or trade flat? My guess is a slump. I think we're going to go down with the jobs report. Dollar index is probably going to go higher, and since that's been what's been driving the markets as of recently, with the dollar going down, the markets have been going up. Once that flips over on its head, then you'll see SPY and the rest of the market coming down with it. And somebody just asked me the same question in the Discord. Let's see. More jobs added, higher interest rates, higher risk of recession. Let's pull up the economic calendar. It's coming out in about 15 minutes, so we still have a good bit of time to wait until this report comes out. We're checking back in on the put debit spreads for SPY. Currently up by 40. I think this is for the day. The daily return. Yeah, so these are at break even, and that Tesla trade has gone south at this point. Let's see, Tesla down to 194, so definitely a pullback there, but seems to be catching a bottom right now, or a support right around 194 or so. And then looking at the economic calendar, the estimate for the JOLTS job openings is 10.4 million, which would be down from 10.8 million in the last reading. That would be a pretty sizable drop too, like 400,000 jobs not added to the economy. Would be a pretty sizable drop. So if it comes in between this, that might still, like if it comes in at like 10.5, 10.6, I still think that could be bullish for the market. Again, if the JOLTS job openings comes in low, the dollar is going to go down with that, which is going to send the markets up. Or at least that's been the correlation for the past month. Unless you get the reversal into recession fears again, then it would be the opposite. But right now it seems like that's not so much the case. The Dow is down 0.13. Again, IWM is leading the way down down 0.5%. Q's is only down 0.1, and then SPY is down only 0.05. But I think we're going to hit this 410 mark probably after the JOLTS job openings would be my guess, if it comes in higher than expected. STZ. Haven't heard of STZ. I didn't find any stocks for earnings this week interesting. Let's see, STZ, pretty low trading volume. Let me see what the trading volume is this morning. STZ only traded 100,000 times so far this morning, so it doesn't have a lot of trading volume behind it, which makes getting in and out of your options a lot harder. The bid-ask spread is going to be wider for that. So if we go over to their option chain for STZ, let's set the expiration date for Thursday. Buy like a 220 call or something. Your bid-ask spread is 760 and 870. So you have a $1 wide bid-ask spread. You could probably get a better one on Aries. But even then, I would imagine that it's still pretty wide if it's only been traded 100,000 times this morning. It's very low trading volume. Yeah, you're looking at 760, 870 for the bid-ask spread. So that's still $1.10 wide, even on Aries. So that means that you're going to pay a lot more to open the option since there's less people willing to sell you that option. Let's see. Support and resistance levels. From the last couple of days, you're looking at 225. Roughly. It's definitely trading lower than a lot of other stocks as of right now. But yeah, you're looking at 225 for a support level based on this gap down. Their last earnings was taken pretty horribly by the market, it looks like. Next supports are going to be at, looks like 221. And then as low as like 219 is what it's looking like here. So 219 based on this gap, where the low was actually 218.80. And the low for this gap was 226.38, so that's actually going to be a resistance. And then support level is going to come from this candle, where the high was 225. Wait, no. 220. Let's see. 224.90. Resistance, you're going to have like 230 from this gap right here, or you could use this candle of significance at 228. And then about 221 right down here from these support levels. So those are your support and resistance levels that I'll be watching for. 226.38, 224.90, 221 supports, and then 218.80, worst case scenario, and then resistance at 226.38 and 228. Jobs to come in lower than expected. I think that the economy, the labor market is still pretty resilient. I don't think that the banking mess over the last month is really going to change that. I do think that eventually that's going to have an impact, but probably not yet. Dollar index is still headed lower right now at 101.95, so that ended up losing the 102 level. VIX is still up 2% almost, 1890. And the 10 years still headed up with oil right now. SPY is breaking even. IWM is still leading the way down, 0.7%. I think IWM is probably going to be what leads. If the market does fall, it's going to follow what IWM is doing. Again, this is like risk on, risk off indicator. If IWM is selling off, then this recent rally has become too risky for the market. So QQQ is still up 0.1%, so you could take this as a decent opportunity to go short QQQ if IWM keeps falling. Obviously, it could recover after the JOLTS job openings, but right now with the price action on IWM, QQQ would likely come down. Stellantis and BMW are in talks with Panasonic over a new EV battery plant in North America. Do they have their own stock? Let's see. Not seeing that. All right, this report's coming out in 4 minutes now. Go over to the economic calendar. Again, the expectations is 10.4 million. The last reading was 10.824. I think if this comes in between these numbers, that would probably be bullish for the market. And then if it comes in lower, say like 10.2, that could be recessionary. But we'll see how the markets interpret it when it comes out. Right now we're just flat for SPY, so this will definitely be a decisive event for today. Micron is down still another 1.1%. I guess it's trading at the lows from yesterday at 57 or 58. And then looking at the other chips, Nvidia's down 1%. So it's kind of just in line with what Nvidia is trading right now. And AMD still at 96. I thought this would be above 100 at this point, but not seeing as much of the love as Nvidia has been. All right. Let's watch the SPY trades as this drops. We got about 30 seconds. We didn't end up going down to 410. I think that was a fake out though. Yeah, this candle right here, there's some sort of glitch that happened. All right. Refresh this page. Jolt's job openings is not seeing it yet. Initial reaction was up for 1169 at the high. Still not seeing the report yet. Let's see if Thinkorswim has it. Nope. Not getting the report yet. IWM is coming back up a little bit, down 0.5% from down 0.7%. So maybe that could be leading us up. Let's see. Refresh this again. Still not seeing the Jolt's job openings. Drum roll, please. Slow drum roll. Data has taken a while to process. There it is. 9.93 million versus 10.4 million expected. So that's a pretty significant miss for the Jolt's job openings. The dollar is headed lower. So you're probably going to see a knee-jerk reaction for QQQ going up. And that's significantly lower than expected. So could be recessionary, but the markets are still eating it up right now. Going positive 0.2% at the moment. And then that Tesla trade. Tesla's at 196, so recovering a little bit from 194. Thinking about doing a 410 put credit spread for SPY after that report. Still paying 17 cents right now. We'll probably see some volatility to the downside here too. Bullish report. It's bullish in the sense that it missed to the downside, but it was a significant miss to the downside at what was it, 9.9 or something like that. Yeah, 9.93 versus 10.6 million at the last reading. So that was actually revised down from 10.8. And the expectations was 10.4. So this could be a recessionary report since it came in so much lower than what was expected and so much lower than it was the month before. So if now you're getting recession fears, you could have both the dollar index and the markets pulling back at the same time. But we haven't really had any recession sentiment within the market for the last couple of weeks since the banking meltdown with Silicon Valley Bank a couple of weeks ago. So we'll see. The initial reaction was definitely bullish. The algos ended up buying it up. Yeah, it would mean that the Fed is doing their job, which means that interest rates would probably pull back. So you're probably going to see a resurgence. 10 years down, 0.5% now. You're probably going to see bonds going back up. TLT is up 0.15% so far off of this report. So definitely triggering that one up. So bonds would be a decent move to the upside. Gold probably along with that. Anything that's recession vibes would be going up. But oil is sticking around. So that's kind of the what's weird about this is oil is still sticking. If we're going into a recession, usually oil comes down, but that's not the case because of the OPEC cut that they did. So markets might just trade flat on indecision this morning. Let's see. Walmart and McDonald's, iron condors for 134 to 147. McDonald's 255 to 280. Let's see. McDonald's. It's at 280. That's cutting it pretty close to the upside here. I mean, you're in the money slightly for that one. For the past year, that's at an all-time high, or like a yearly high at least. So yeah, you could see a pullback below 280, but you're betting against the momentum right now at 70 RSI. So I would probably raise the strike price there, roll that up. And then for Walmart, on the other hand, probably also pretty high, 148, and you're assuming it's going to stay below 147. So I'd probably roll both of those up. Walmart, I would roll to 150. McDonald's, I would probably roll to 290. Tesla going back to 208 this week. I don't know about 208. That would be a pretty substantial move. But I do think probably something along the lines of like 202 or so, like 1% above the 200 mark. Maybe a little bit more, like 1.5% to like 204. Somewhere around there would be reasonable in my opinion. But yeah, oil or gold is definitely pumping on this JOLTS job openings report. We'll see if we see a pullback for the indices. QQQ is managing up 0.3%. So I might take the QQQ bullish trade. Again, the algorithms are going to buy up QQQ anytime the dollar goes down. So that could be a decent position to take. Let's see, QQQ. Depending on how cheap it is, at least. If it's expensive, then probably not worth it. Going for 52 to assume that we'll be above 322 today. I'd say that's pretty pricey. Let's see. If we assume it'll go to 323, a new high, you're paying, looks like 40 cents for that, 45 cents. Wait, hold on. That's not right. You're paying 30 cents to assume it'll go to 323. And let's see, 45 cents to assume it'll go to 322. I think 45 is a little too expensive to assume a new high today. So I think I'm just going to hold the positions that I have. Looks like the VIX is drawing down again. Well, the market's not really making a decision to move here. Almost tempted to do a call credit spread for UVIXY. Don't want to risk my shares because I still think that we could see a decent pop given enough time. But a call credit spread might be decent as long as the pay is good. You're only getting paid 9 cents to assume it'll be below 450 right now by the end of this week, though. So even the pay for that is garbage. Anything that's... all the bearish trades seem to be too cheap or too much risk right now. IWM looks like it's headed to a new low. Looking at that 177 mark that it bounced on. I think if it flushes 177, you'll see the rest of the market pulling back, but we'll see. It's already down 0.7%, so you would have already expected a drop for it, but I haven't seen that yet. Right now, what's pumping it is gold and bonds, TLT, at 107, almost breaking the new high. And then gold at 187, that is a new high for gold. 186.82. Previous high was 186.86. I think I'm going to do a Iron Condor here. Let's see. QQQ might be our best pick. I guess probably not going to go above 324, but probably not going to slip below 320, 319. And right now that trade is paying 36 cents in credit. That's pretty good credit. So the midpoint for that would be, let's see, 320 and 323. About where it's trading right now at 321.50. Probably take on less risk on this trade. Open 5 of them. I'm going for 34 cents each. So a total 170 credit. Kind of worried about that 320 strike price though. We're pretty close to both sides of that. I would just want like 45 or like 50 cents of credit for it, but it's not paying that much. Credits are terrible right now. Strange SPY and IWM are opposite. Yeah, IWM is leading the way down this morning, 0.75%. It still has that 177 support level. I think once it breaks through it, then you might come down with the rest. The rest of the market might follow through with that. Meta for this week. Why QQQ over SPY? I think QQQ will still kind of hold the line because the dollar is coming back. But with the new recession vibes that we're getting from this, it's probably not going to go up with that either, just because of how much it's already gone up over the past month. QQQ has been the leader, so I think that Iron Condor for QQQ would be the better trade versus SPY. But I'm too worried about that 320 level. Like, it would just take us breaking even basically to get back to 320. So the 37 cents in credit doesn't seem like it's worth it to me right now. Price target for Meta though. Let's see. Meta currently trading at 215. This one's making a new 2-day high at least. New monthly high. On the yearly chart, this is almost at The yearly high is at 236. You've got some resistance at about 225, probably 220. So this keeps on going up. If the markets keep perpetuating up, you might see like 221. Well, I guess this is a short week. So I'd say 220 to the upside if the markets keep pushing. And then to the downside, let's see. Probably like 210 would be my guess. Based on this support level before the fallout right here. But yeah, the markets are just kind of balancing around right now. Seems to be a balancing act. IWM finally fell below 177. So if we do see a reversal, that's probably going to be the leader here. Down to 177 or 176.80 right now. So if we see the market's pulling back, I think IWM is probably just the one that's leading the way right now. This is your risk on, risk off indicator based on small cap companies just being more risky just because they have less equity to offer. In a recession, it's harder for them to come up with capital. Walmart and McDonald's, yeah. Walmart currently at 148. You were assuming 147. So I'd probably roll that up to 150, 151. And then McDonald's trading at 281, 282. You were assuming under 280. I'd probably roll that up to like 285 or so. Just set the strike prices a little bit higher. All right, these put debit spreads are back to break even now. So I guess the sentiment for today is recession. So I wonder if we'll see a good pop for the VIX on this, like we did with the banking crisis that sparked recession fears. I don't know if we'll see, 5-6% for the VIX, but last time we had recession fears, that's how much we were dropping before. But that was also banking crisis, which is a little bit different than, slow burn into a recession. I still think that the recession is probably 5 months out, and probably in October would be my guess is when that starts. And right now we're in beginning of April, so we still have a long way for all that excess money, excess capital that's been flooded into the market to be kind of dwindled out. But yeah, initial reaction to that JOLTS job openings was positive, and now it's pulling back on recession fears. Gold is leading the way up 2% at 188. This might even hit 190 for GLD soon enough. The VIX is up 3%. That's actually leading the market today, at least for the fundamentals. All right, the 411, 410 put debit spreads for Spire at 50 cents a pop now. It's trading at 410.30. I would have thought that these would have gone for like 55 at this moment, but puts have just been really, really cheap recently. until people start piling into the puts, and then this will start to gain some value. But usually whenever it's trading at the short strike price, the one that you sell, this goes for like 60, and it's getting close to it at 56. So it seems like we're starting to find some balance in put options right now. And I'm glad that I did not take that QQQ Iron Condor now. Trading below 320, which is where I was assuming it would be above. So maybe we can get a decent credit for a put credit spread now for the Qs. Even now, you're only getting like 15 cents for assuming it's going to stay above 318. It's another $2 down from where it's at right now. So 2 over 320. It's like 0.6%. 0.06%. Hard to say that's really worth it. Maybe if we come down to this 318.74 level, that'll be a little bit pricier and we can get better credit for it. Bought AMC puts yesterday, didn't do it. I feel dumb now. Oh man, AMC is a hard one to bet against. So much irrationality in the stock. But yeah, that is really, there's a lot of volume coming in this morning. Down over 23%. It was halted, it looks like. Is there any news? Let's see. AMC's ape conversion settlement could lead to potentially massive $16 billion equity raise. God dang. They are diluting the shit out of the apes. That sucks. But that's the stock market for you. Executives taking advantage. Nothing really new there. Do I think UVIXI will go up today? Seems like it could. Based on the recession fears, if we see, the same kind of sentiment we did a couple weeks ago with the banks, yeah, I could see the VIX going up like 5% or something like that. X, isn't that like U.S. Steel? Yeah, U.S. Steel Corp. I haven't traded this in a very long time. It's just kind of trading flat, not really moving. Let's see, it's down from 38 at the high, up from 16 at the bottom. So it was trading in the middle of the range at 26. It's at 25 now. It's looking bearish with the RSI. And I mean, if you're going into a recession, I can't imagine steel seeing a good rise if there's less going on in the economy, if there's less building through the economy. I would imagine that X U.S. Steel would come down. Let's see what this did back in 2007. Was kind of a crazy time for X, but it ended up coming down from 180, Jesus Christ, down to 20 in that recession period. Let's see. latest recession period back in 2018 to 2019. It came down from $40 to $4, 90%. So yeah, if we go into another recession, I would think that X or US Steel would come down too. This stock really sells off in recessions though. Like 180 down to 20. It lost 90% both times that we went into a recession here. And then if you're looking at, let's see, the 1999, 2001 recession, let's see. This went down from 33 down to 15, so it lost about half of its value then. So yeah, probably not a good buy going into a recession. Other precious metals though, gold would do pretty well. Silver would do pretty well. SLV. Silver is definitely lagging gold though. So if you want a cheaper version of a precious metal, silver would be the move. QQQ is just refusing to fall now. Up 0.08%, 0.1%. It's below 50 on the RSI, so that's bearish, but if it just keeps trading 40 to 60 RSI, it's just going to be neutral for the day. And trade around like 320.7 or so. And then Tesla's back down to the lows for today at 193, 194. The 30-year treasury, or let's see. I mean, bonds are probably going to be going up. So with yields dropping, obviously bonds will go up in price. And if we're going into a recession, more people are going to put their money into bonds because it's a safe haven. So putting your money into US 30-year, 10-year, 5-year, 2-year, basically anything across the board, it's probably going to do pretty good. I'm not sure what the 30-year is paying. Oh, wait. This is the US 30, which is actually in Dow Jones. Dow Jones would hold up better in a recession than what you'll see for QQQ and SPY, because it's more based on industrial staples like McDonald's, Walmart, and things that people can't really go without in a recession. So the Dow would be doing better than what you'll see for SPY, since it's so tech-oriented, and QQQ especially so tech-oriented. So if you want to lose less money buying stocks in a recession, Dow would be a better pick than SPY or QQQ. But yeah, it looks like we caught some support at 410. For SPY at 411 now. Going to be watching IWM, see if that goes back above 177, that might be my trigger to get out for these put debit spreads. Because that was a leader to the downside. Currently at 176.50, so ways to go back to 177. But yeah, just a very mixed market this morning. IWM down, the Dow is down, SPY is basically flat, and QQQ is the one that's leading up so far this morning. And that's mostly just based on the dollar coming down. It's going to have a positive reaction for the Qs generally, at least over the past month. That has been the case. But my guess, Qs is probably going to be flat or come down. So I don't think that it'll pass up like 322, 323. And it's paying about 20. No, it's actually a decent credit, 24 cents right now. Now that bid just dropped to 22 though. So I think I'll just keep the positions I have open. Probably not add anything into it. Unless we go a little bit higher for Qs, then I'll probably assume that it'll stay below 322 with a call credit spread if it pays a good credit. But right now it's paying like 20 cents, so not a good enough credit for me. You could increase the credit with Iron Condor, 318, 317, but that's only paying another 6 cents. So you're only getting 30 to assume it'll be between 318 and 322. But IWM is still slipping right now, 176.10. So yeah, I think the rest of the market's just going to keep on pulling back with that. These are about back to break even. But it seems like you're just getting some push and pull from QQQ going up based on the dollar going down and IWM down 1.3%. Let's see if we do a SPY Iron Condor instead of Qs. How much can we get out of that? Right now it's at 410.60. If we assume that it's going to stay above 409, that by itself is paying 15 cents. And then adding the call to it, 412. Call credit spread. It's paying 35 cents to assume it'll be between 409 and 412. So assuming we still keep getting the push and pull from QQQ and IWM, it would probably trade in that range. But if you get QQQ starting to slip, that would end up and SPY coming below 410, and then you'd be testing that 409 level. Yeah, we're already at 410 now. And the credit didn't even go up, interesting enough. It's at 36 cents. You would have expected that to pop to like 38 at least, but the premiums today are just awful. Across the board. All right, we're starting to make some profit here with SPY at 410. Retesting that 410 level. IWM is below 176. So again, this is leading the way down, but QQQ is balancing that out to where we're just not seeing any move yet, at least. If you get QQQ to drop, though, that's when things will start to... shit will start to hit the fan. Let's see. If we can take a QQQ put debit spread and get it for cheap, that might actually be worth it. Let's see. If we assume that it'll go to that 318.74 mark, basically 319... we're paying 34 cents. That's actually pretty decent. I might actually make that trade. Seems to be the only trade that's worthwhile as of right now. To assume QQQ would go below 319 today. Still up 0.05%, so it's still holding its gains. But I think that's an okay opportunity. There we go. New options alert. This will be a day trade. Just opened a new QQQ, put debit spread expiring today. Today is the 4th of April. I got them at 35 each. 319, 320 strike prices. All right. So that starts to drop. That'll bring SPY down with it. But that's if it starts to drop. Right now it's at 43 RSI, so it ended up pulling back from 50, which is looking bearish to start. But again, this could just end up trading around 50 RSI and just being flat for the day. But SPY just fell below 410, so we'll see how it plays out. I'll probably try to get out of this QQQ trade pretty quickly. I opened 10 of them at 35. They're going for 37, 38 already. You're probably going to get some support at 320. Let's see. Last couple days of trading. Yeah, it's still below 50. So maybe that'll be my trigger to get out. Or if we do end up getting a solid bounce from that 320 level that we just got bought up on, have to exit. But yeah, that seems to be the only decent downside opportunity as of right now for QQQ. Not really. Nobody's really expecting it to drop with the dollar down today. But considering that it's been up pretty much all month, I think that it could be reasonable to see a drop on the recession fears from the JOLTS job openings report. All right, we're retesting 320 again here. Check my Twitter. I already checked it. I saw the video. Started watching it. All right, we're at 320 now, 320.10. Looks like we caught that bounce again at 320. Just doesn't seem to want to slip below it right now. It's open 10 at 35. They're going for 31 at the bid. See if we can break even for them at least. Seems like the break-even point is moving lower, or sorry, higher. I think I opened them whenever QQQ was trading at like 320.3 at 35 each. But the bid-ask spread on these is pretty wide at 36, 38. I don't know why QQQ has such a bad bid-ask spread for Robinhood. You would think I mean, it's traded 14 million times. SPY's traded 16 million times, so it has about the same amount of trading volume behind it. But the spreads are always wider for some reason for QQQ versus SPY. How the market's been trading me pretty rough the last couple of weeks for March, given that, you know, the rip up took away a lot of my bearish trades. But yesterday I made 200. Hoping I can make some money with this Q's trade this morning, but it's just kind of slow. Not moving too quick as of yet. IWM is below 176 still, 175.75. It's down 1.5%. That's pretty rough for IWM. Let's see. IWM, let's see if it has any supports. Not for the last couple of days. Going back on the 20-day chart, the monthly chart, you might have some supports at like 174, 173. But pretty brutal sell-off for IWM today. Let's see. I doubt that you would get a good credit for a 174, 173 put credit spread though. It's another $1.50 down from where it's trading right now. Oh, you'd have to have the expiration date for tomorrow since it's a three weekly expiration dates instead of 5, like SPY and Qs. But if you assume it's going to stay above 173, you only get paid 14 cents in credit. So risk reward is pretty awful. Yeah, longer term puts definitely worth it with the VIX trading as low as it is at 19. Short term puts, they can be kind of hit or miss. Just because of the VIX is trading so low doesn't really mean that those puts are cheap. Because lately the markets just only want to go up. So it's making all the short term puts valueless, losing all their value. My worry would be if we have the VIX trading low for a long period of time like we did previously before the bank issues. The VIX was trading, let's see, since the beginning of the year, it was below 22. So it was in the lower end of the range that it's been for the past year, between 20 and 30. So we just continue to trade around 20 to 22 for the VIX. It's just going to burn all the puts, whether they're longer term or shorter term. The SPY trades are up 96 right now. Let's see. Trading for 60 cents a pop. It's about the going price that they should be at. A little bit lower, I think. Opened 8 at 47. Now they're going for 57 at the bid. They're just so damn cheap. think I'd rather take profits on the Qs first than SPY. Just because I'm less certain on that than I am for SPY below 410. But if this momentum starts to build up for Qs, 320 could be in the works pretty soon. Just have to have enough momentum to get it past 320, which it doesn't seem to want. Doesn't seem to want to go below. So stubborn. It's got that 320 psychological price level. And the dollar index is down, so algorithms, the algos are going to buy it up just because the dollar is down, even if that means a recession. How many stocks am I trading options on? Usually SPY, QQQ, IWM, and then any earnings if there's major earnings for the week. So usually probably about 5 stocks that I trade on a weekly basis. Which option selling strategy am I currently using? Don't use cover calls or cash secure puts, too expensive for my taste. Just using credit spreads for the most part for selling. And then iron condors if it fits. These are down to 30 a pop now, down 60. IWM might be catching some support at 175.50, but I still think 175 could be the case. But yeah, anytime that Qs hits 320, it just gets bought up instantly. At least for today. Until the dollar index starts recovering, then that's probably going to bring it down, but haven't seen it yet. Haven't seen that just yet. Kind of wish I had taken a call credit spread instead of the put debit spread for QQQ now. But the pay was a lot less. The profits would be a lot less. Yeah, these put debit spreads are just back to break even. Back and forth between break even, loss, and wins. Welcome, Donald. What is the current trading strategy? Mostly just spread options. Assuming direction based on incoming data, based on price levels. So a combination of fundamental technical analysis, or not fundamental, but macro analysis, and then a little bit of technical analysis with price levels. And then using spread options to take advantage of that. We finally got the flush below 320. Let's see if we hold that down. Last trading day of the week in the US? No, not yet. Not till Thursday. We have Good Friday off, though. All right, these are going for 40 now. So up $40 here. Probably not going to hold it for too long after that 320 break, just in case you get that snap up if people want to buy it immediately. Bottom for 35, they're going for 40 at the bid. And 39 at the bid. Alright, I'll place the order for 40. God dang it. I'll have to place it on my phone so I don't have to do two-factor authentication. Okay. Yep, and now we're back above 320. So that dip just got bought right back up. But I'm going to place the order for 40 cents to exit. Unless we can get a crack below 320, like a solid sell-off. But it's just retesting again and again and again. XLE is tanking despite the oil prices going up. Yeah, that could be the case. Profit taken. I mean, oil went up, what, 6% yesterday alone? Now it's down 0.2%. But looking at XLE, the energy ETF, it's down 1.3. Yesterday it went from 83 to 86, so that's like 2%, right? Let's see, 83.5% actually. So yeah, the 1.3% pullback probably necessary. But oil coming down, 0.2% is also kind of leading that, just because of it was up 6% yesterday. Now, if that starts to retrace because of recession fears, you're going to see XLE coming down with it. But yesterday, the reason why oil went up was because of the OPEC news, and basically they're trying to artificially keep prices high. But if we're actually going into a recession in the coming months, the next 6 months is my best guess. If we're actually going into a recession, then oil prices would continue to fall because there's going to be less demand for oil in the economy. There's going to be less people traveling, less spending in the economy, obviously. So that would lead the price of oil to come down. So that's probably why you're getting a small pullback of 0.5% after being up 6% yesterday. So oil might start to retrace. Let's see. And this sell-off really started at about 10:15 or 10:10, so about 10 minutes after the jobs report came out. So could have been the leader as to why it's coming back down 0.5% right now. All right, these are going for 50 almost. I'm just going to place the price for it really high so I don't get shot in the foot for two-factor authentication. $760, $223. now we have some supports at 319.70. The low for this candle. They're only going for 40 a piece. They were going for like 44 at the bid price, so I'll try to type in my order for 45 after I bought them for 35, so that'll be 100 to profit. And then the SPY trade, that one's up 200 right now. Trading at 66 a piece. I bought them for 47. Well, that's today's return, 192, and then the total return 136. All right, we're back to 320 for Q, so not getting filled for the trade here. Probably just gonna have to lower my order to 40. Which is about where the bid is. Yeah, I think I'll keep this and then close the SPY trade instead. Again, I think Q's is a better downside opportunity than SPY is for right now. It's already down 0.3. Q's is basically flat. So I'll close out of these instead at 65 each. Bottom for 47, so about 150 profit. I need to close all of them and not just one. At 65. All right, there we go. And then I'll hold the QQQ trade. Just because it provides more opportunity of any downside, whereas SPY's already seen a lot of its downside already. All right. Well, that's not the right screenshot. Closing options alert. Premium members just took profits on the SPY 310, or sorry, 410, 411 put debit spread expiring today. Today's the 4th at 65 each. And then I'm holding the Q's trade for more downside. Got a put sell for 421 at 81.50 for XLE. Yeah, let's see. 81.50. I didn't even know they had 50-cent strike prices. It's trading at 85. And you got it for, it doesn't say how much credit, but let's see. I think short-term oil and energy can do well, but long-term, if you're talking about 6 months, probably going to come down. So I wouldn't want to be the holder for XLE for a 6-month time frame, but if you're talking like the next month or two, I would say that would be okay. But at 84 put expiring April 19th or April 21st, it's paying 130. 421. Oh, 81.50. Wrong strike price. Sorry about that. Yeah, it's going for 63 cents a piece. Yeah, I would probably want to be a buyer for XLE around $80 or so. I think that's an okay opportunity. Again, I just wouldn't want to hold that for more than a couple of months. Right before the oil news from OPEC, it was trading at 83. So you're probably going to get some supports around then. That was a fundamental shift. So you're probably going to catch some supports there. All right. Q's is coming down now. So I'm glad that I held that one and closed at a SPY for a profit. Looking at the 318.74 mark, but we're already at the daily low. So this is getting kind of testy. I opened 10 of them at 35. They're going for almost 55 a piece. It's about 200 profit. Oh, sorry about that. .5. UVXY is actually up 4.9%. I might start selling the cover calls for UVXY now after this trade. All right. I think 55 would be a decent price on it. And try to close them at 55. Originally bought them for 35, so that would be 200 profit for 10 of these. If we flush through that low, that should get filled, but if we don't, it might not get filled. IWM is below 175 now, so that's really just taking the hit today. But yeah, $200 profit there. For the Qs, closing options alert, premium, just took profits on the 319, 320, whoops, QQQ, put debit spread expiring today, 4-4 at 55 each. Originally picked those up at 35. Originally opened at 35 each. 200 profits. And then on this one, let's see. Sold them at 55 and I originally picked up 8 for, let's see, 47. So 376. 520. 144 profit plus the 200 for Q, so good 344 profit today. Can you trade with me? Oh man, I wouldn't want to trade with me. Sometimes it can get pretty brutal to the downside for sure. Especially when I'm all bearish, and the last 2 weeks has been all bullish. It's been pretty rough end of March for me. But yeah, let's log these trades in. I opened the SPY trade yesterday, closed it today. SPY, it was a put debit spread. That's a bearish strategy. Expiration date was today. Strike prices were 411 that I bought, 410 that I sold. I opened 8 of them. Let's go back to the log at 47, I think. And then close them at 65. 410. I can just type in the strike prices. 47 and 65. And then the Q's trade was a 0 data expiration, day trade, debit spread, bear strategy, expiration today. Oh no, I messed up that calculation. Calculation's already messed up. That's weird. Anyway, strike prices were 320 long, 319 short, 10 of them at 35, close them at 55. So, nice little 340 in profit. But I do have a trade that I closed in, that I opened in March that I need to log here. So let me add that. Above, not below. And that was, let's see, closing options alert. $4.647 put debit spread. Open 10 at 34 on 331. Closed him yesterday. SPY put debit spread bear strategy. Expiration was yesterday, I think. Let me see. 4-4. That was actually today. Strike prices that I chose, 407, 406, 10 of them that I opened at 35 or 34, closed them at 9 apiece. So, beginning of April, currently in the positive. Well, let me make sure that's reflecting. Closed it yesterday. That should get filled in, but it didn't change. B12 to B. Make sure this is the right formula. I'll refresh the page maybe. That's strange. Not sure why it's not getting a log there. Let's say it opened on 4-1. Why is it not? Huh. Very strange. Let me make sure all the formulas are right. 250. Alright, for some reason it doesn't want to log that trade. But, let's see. I'll take this. Minus 250. Down 34 yesterday, up 344 today for a profit so far this month of 310. So, that's all the trades I got for y'all. Do I prefer debit or credit spreads? Depends on the volatility and how the VIX is trading. Usually whenever VIX is trading above 25, there's more opportunity in debit spreads. And credit spreads are easier to go in the money and take the max loss for it. So I would rather be on debit spreads whenever the VIX is above 25. But if the VIX is below 25, I'm generally more in credit spreads. Lately, I feel like we take the stairs down and the elevator up. Yeah, exactly. That's exactly how it's been feeling lately. Hopefully we get the other way around. Hopefully we get some rationale in this market. I mean, going into recession is definitely not bullish, but the markets have been loving the recession fears because it means the Fed is going to pivot. Tesla keeps going down. Yeah. With Q's coming down, I would expect Tesla to come down with it. I still got that 200 call debit spread. Let's see. It's down 200 to 48. I paid 120. I'm assuming it's going to get back to 200 by Thursday, so that seems like a bit of a long shot. But I'll probably close this closer to the end of the day in case we recover. But yeah, everything is just kind of dumping today. Even the Dow is coming down 0.7%, so pretty brutal day across the board. And usually whenever that happens, whenever you get a broad sell-off, the next morning it ends up recovering some of that. So I'll probably close the Tesla trade maybe tomorrow morning instead with the broad sell-off today. Yeah. But yeah, that's all the trades I got for y'all today, and I will catch y'all tomorrow, Wednesday at 9:30. See everybody.